Hello people, welcome back to my channel and welcome. If you're new here, my name is Eunice, a personal finance and small business coach. In this channel, we all about wealth creation. Please consider subscribing for insightful videos on personal finance, investment ideas, business ideas, and many other strategies that can be used in your wealth creation journey. In today's video, we are going to be looking at the rules of investing. What are those basics that you need to practice or to have for you in order to have a successful investment journey? So if you've not started, one of these basics is getting started. You know, they say a journey of 1,000 miles starts with a single step. So there's no way you can call yourself an investor and yet you've not jumped into your investment journey. So with investment, it only requires, or with investing, it only requires you to start, to begin, to get started from wherever you are at. Just check around for the investment vehicles that are available for you, you know, depending on what you have at the moment or at that point, or at this point to be specific. What is that you have that you need to put aside for you to begin on this investment journey? You can't call yourself an investor and yet you've not started investing. So the first thing before we think about anything else is getting started on your investment journey. Another thing else that you need to practice is diversification. I would say diversify. Don't put all your eggs in one basket. Don't invest your money in one particular asset class. Just look out, exercise, shopping around for different investments that you need to put your money into. Let's say, for instance, if today you had 500,000 Kenya shillings, you don't go and put all that maybe into a particular, fund manager to manage that money, maybe in the money markets. So what you need to do is, if this is all that you have at the moment, learn to split it, learn to put it into different vehicles so that you are able to shelf yourself, against the risks that face a particular field. This is part of, risk management. You don't put everything together and expect, to be safe, because one thing can happen that would affect that particular market or that asset, and it will make all your investment, to go under or to be affected. So learn to diversify, invest in different asset classes for you to shield or maybe to protect your investment. Another thing that maybe one needs to learn or to have is in increasing their investment, knowledge. This can only come about when you learn, you look for resources, you look for information. Information about investments are everywhere. So always seek to better yourself in the line of investment, so that when you want to get into a certain investment, what you're getting yourself into. You don't you don't rely on hearsay, or you don't rely on what is happening at the moment, or what's the trend, or what people are saying about it. Even when you hear about a particular investment that is coming about, it's always important to first do background check and get as much information as you can about that particular investment. Just don't jump in. So every day pursue getting more information and learning or equipping yourself with information about investment, especially on the lines of investments that you are interested in. Get as much information as you can. I know it is only to a certain limit that one can understand these things, because there are some situations where you need to understand some particular, accounts, analyzing some particular accounts, and it's not everyone's thing. So at that point, you might need to, to engage, a financial analyst, a certified financial analyst, to help you in that. But in the basics, there are those information that you can learn about a particular company, maybe that you've invested in, about a particular product that you might want to be interested in. Just increase, or invest in your knowledge about these particular products that are available or that you'll be interested in investing in. Another rule of investing is thinking long term. When you're getting into the investment journey, or when you're starting into different investments, you always need to think long term. It's very important for you to think this way, because we've seen people being affected in the sense that you've invested in a particular stock in the stock market, and then you're thinking, you're looking at the short term, what gains this particular stock or this share will bring back. And sometimes, because of the different circumstances that are happening in the economy, or because of different factors, that particular stock might not go well or might not be doing well at that particular time. So if you're not the person who is thinking long term, you might think of pulling out, other than considering what might happen in the near future, considering what other factors that might affect the market that might lead to the increase in the value of this particular stock. So when you don't think long term, you are bound to pull out of an investment without this investment maturing well enough. So when you think maybe long term, it gives you an allowance of allowing all these other errors to happen, allowing the market, to undergo whatever, situation that it might be undergoing at a present time, for it to recover in the future and for you to benefit from the gains. So whenever you're doing investment, always consider that success does not happen instantly. Success takes time. So when you have this at the back of your mind, then when I'm going to this particular investment, then I'll give it this particular time and for it to mature and for it to have gained well enough. When you use there's something called the rule of 72. You might sometimes be discouraged when you see maybe at what particular time that your investment might double. But it is important that when you're getting into an investment, look at all possible direction and always, think long term. Do not look at it at the present time or, those instant gains that you may want, but always have patience and think long term about any investment that you're putting your money into. Something else that you need to consider when you're getting into in the investment journey, or when you're investing, is always invest in what you believe in. So always invest in a product. Like, let's say, for instance, look at the products that you encounter every day. Look at the product that you use every day. When you use something every day, that means you believe in that thing. If you believe in a particular brand, then it is easier for you to have confidence in that particular brand. So it is important that even when you're starting your investment, whether it's in the stock market, whether it's in anything else, whether it's in a particular maybe vehicle, whether it's in real estate, always invest in what you believe in. When you invest in what you believe in, that means you will have an interest even of getting more information about that product. You are using that product every day, so every time when you're using it, then you know that, I have my investment in here. So always invest in what you believe in. The problem or the challenge of investing in something that you don't believe in or something that you've been lured into investing into is that you never have interest of finding how that particular sector is performing. And when you don't have an interest, then that means you are at risk of losing your investment, because if that investment is going, or that particular industry is going down, then you go down with it because you do not have time or you don't have the interest of gaining as much information about the particular industry as possible. So it is very important for you to invest in what you believe in. Do not invest in what you don't believe in. Another rule of investing is investing what you can when you can. Always put it as important as it should. Your investment journey, always consider it as important as it should, because it is important. When you invest, you're giving yourself that financial freedom. You're growing your financial independence. So don't fall back on your investing journey, but always invest what you have and when you can. Do not wait for you to accumulate, a lot of wealth or a particular certain amount of money for you to make that investment. Rather, invest at that particular, what you have at that particular time. There are markets that are open. You find there are markets with products that you can invest with as low as 500 Kenya shillings or $5. There are markets where you can start to investing with 1,000 Kenya shillings or $10. There are markets where you can you can put in your money starting from $25, and it goes that way. Just always look at what is available for you at that particular time. Just do not sit back with your cash, with your monies, and fail to invest, because when you sit with that amount of money, the power of compounding will not work for you. So always ensure and strive to invest. You know, a shilling saved is different from a shilling invested is different from a shilling, you know, hidden or just put aside. So it is very important for you to always strive to invest what you can when you can. Another rule when it comes to investing is leaving room for error. You know, when it comes to investment, we always talk about creating a risk profile. You know, risk go hand in hand with the returns. So sometimes you hear somebody telling you that high risk, you know, assets or investments have a chance of high returns, as the same with low risk investments, with you know, they have low returns. So every time we look at investment, you know, returns going hand in hand with risk. You can never run away from risk, and that's why we say you all need to always leave room for error, because sometimes you might invest in a particular product. Let's say, for instance, you've invested in a particular stock, and then tomorrow some news come in about that particular industry and the stock goes down, because this is one of the things that really affect the stock market. You know, when we get negative news about a particular product, about a particular company, you know, about something that is happening. Let's say, for instance, when you're talking about oil really affect the dollar, you know. So every time some negative news comes about, it will affect, you know, how that particular asset performs. And what happens is that its stock or the share price goes down immediately. So sometimes you might invest in some particular investment that looked lucrative, but you know, it works against you. So what do? You do not go into depression. You do not fall back. You do not, you know, we get yourself and swear that you not invest again. Always, when investing, always leave room for errors. Thank you so much for watching today's video. I hope you've gained one or two things. Please consider subscribing to this channel for this and much more, and please share this video so that it reaches a bigger audience, and this will help this channel to grow and to reach more people. Also remember to leave a comment down below so that I may get to understand or to know, you know, how this channel is helping you, or maybe how this video has been of, you know, of help to you. Until next time, it's a bye-bye for now.